Welcome everybody to this week's session of High Street Conversations. And delighted to welcome anybody who's not been part of High Street Conversations before. Welcome to our informal gathering of ATCM members and stakeholders across the UK and Ireland. So today we are naming the session de-anchoring, looking at the issue around anchor stores in town centres and how we might be at the I'm not even going to say the beginning, but in the middle of some quite substantial change in terms of the dynamics of our town centres and what that means for commercial property. So, we kind of know this story, don't we? So in previous years, we have seen a number of big retail casualties, not least the likes of BHS and Woolworths. And a number of other anchor tenants. So this, in particular, what we're seeing is nothing new, but I guess the speed of change now is a real challenge. This is following years of turbulence within the retail market. And I would probably say that this turbulence actually has been there for high streets, specifically for decades. And yes, that challenge is shaped in the current day by the digital economy, online shopping, the changes in consumer behavior we've seen because of digital activity. But really, probably the original sin may well have been out of town shopping and the creation of probably surplus retail. And that has been a real challenge for our high streets, culminating into the situation we have today. Now, I think the real shockwave came recently when we had the announcements around Debenhams and Arcadia almost at the same time, just merely a few weeks ago. And I suppose it shouldn't be a surprise that these two announcements came at the same time, because the businesses, of course, are interlinked through the use of concessions in Debenhams stores by the Arcadia group. So there is a linkage there. And you just think about the weight of these announcements, what Debenhams and the Arcadia group means to the high street. Debenhams is nearly 250 years old as a brand, starting off back in 1778, going from a single store up to nearly 200 stores at its peak. Big influence in terms of UK retail, also in terms of Irish retail as well, buying up the leaseholds for the Rocher stores and anchoring the Jarvis shopping centre and the Mahon Point shopping centre as well, down near Cork. And then as for Arcadia, while Debenhams had history and heritage, Arcadia had scale. The aforementioned BHS, Burton, Dorothy Perkins, Evans, Miss Selfridge, Topman, Topshop, Warehouse, and many other brands fell under the Arcadia group. And at its peak, it had 2,500 UK outlets plus concessions in a number of department stores, including, of course, Debenhams, with franchises operating internationally, not least, again, in Ireland with Topshop and Topman Ireland and Miss Selfridge's Ireland. So it certainly had scale. So they will be missed on the high street. Absolutely. Their failure causes a real sense of nervousness that has now engulfed the future of a number of household names on the high street. And there are critical questions which a number of people are asking, which we probably need answers to. So let's think about the implications. Let's go through this. Firstly, in terms of our various governments, there are now concerns around issues such as tax revenue and employment. This was a report from an article from the Times not too long ago, end of January this came out, where they suggested that the news around both Arcadia and Debenhams had triggered a sense of panic in the Treasury, because we are talking about anchor stores. Their floor space that they take up is not small. So that means the potential loss of revenue in terms of business rates. It means a hit to employment. If I remember correctly, I think this is still the case. Retail is the biggest private sector employer in the UK. So the loss of two big names such as this starts to set off a sense of panic, especially when various governments are struggling with record high levels of borrowing in peacetime following the pandemic. There's then the implications for commercial property as well, and the financial health of landlords and investors due to their exposure to a troubled retail market. And this has knock-on impact. So it's that knock-on impact from those occupiers to the owners, but then also the owners to their lenders, such as their banks, such as various financial institutions. So there's a number of real challenges there, which have an impact right the way up a chain. Now, it's not, this takes on many forms. I think the Financial Times actually reported not too long ago, just a few days ago, that there is as much as £4.2 billion in unpaid rent to UK commercial landlords. So it's absolutely a challenge. And of course, this follows the article, which we've talked about in a previous session, an article from S&P Global saying that the UK lenders are starting to apply pressure to landlords that they must meet their financial obligations by this summer. Remember, in terms of the UK government, I'm not sure what the situation is in Ireland. Some people on the call might be able to give us more information on this, but certainly in terms of the UK government, there's been very little direct support that has gone to landlords. Much of the support has gone to occupiers, but not necessarily landlords. So that is a challenge. And then when we talk about anchors, here's the real thing for me, is anchors have a critical role in shaping what retail in a town centre has historically looked like. They are the key part of the ecosystem. In fact, there are many town centre developments which have been shaped by the anchor. The anchor almost comes first and you shape everything around your anchor. Some of the stores which these anchors occupy have been built specifically to the specs of those particular businesses. So their loss then becomes a massive challenge. So there's lots of questions we need to ask now in terms of what this means for the wider town centre ecosystem, how we reshape town centres in a post-anchor world, if that is indeed what is needed. Is the concept of the retail anchor effectively dead? Are there reasons why anchors are particularly vulnerable, or is this turbulence just consistent across the retail industry? I've heard conflicting information about the success or otherwise of smaller retail businesses. And what does the post-anchor town centre look like, and how do we get there? And then, of course, the big question, the question for now, the question in the immediate future is, in terms of these big retail failures, who is next? And I'm sure that's a question on everybody's mind. And this is aligned, unfortunately, almost perfectly with the news we got today. So on the 11th of March, which is today for those of you watching live, John Lewis has issued a warning that it will be increasing the number of store closures following almost £500 million loss during the past year up to the end of January. The year before, it made 146 million profit. But clearly, I think a mixture of COVID, in the news article by the BBC, John Lewis is fairly clear that this is also about changing consumer behaviours, and John Lewis trying to get the balance right between its online operations and its physical operations. Is this a short-term thing, or is this a long-term thing? So that's a massive question. And just think about some of the stores which John Lewis have let go recently, and the challenge we would have on in terms of understanding what the future for our town centres and city centres would look like, including this particular development from my home city, Birmingham, where John Lewis is the main occupier of the Grand Central scheme. So Grand Central, for those that don't know, is part of Birmingham New Street. So it's a massive transport hub. It's got lots of food, beverage businesses. It is significant in terms of the scale, in terms of John Lewis's footprint on this particular development. And John Lewis last year announced that it would be closing its site here. So how do we look beyond the role of John Lewis and think forward about what comes next? It is not a small challenge to think about the future of our towns and city centres with the types of retail casualties we're seeing. So the request came in from ATCM Wales. They said, look, this is massive for a lot of our town centres. We want to understand more about the role of commercial property and what happens next, how we repurpose, what we need to do in collaboration with property owners, with occupiers, with local and national government to understand our role in supporting the future of town centres. So we've taken them up on that challenge. So to do this deep dive into the role of commercial property properly, we think this needs to be split into 3 parts. I don't think we can cover everything we need to cover in just 1 or 2 sessions. So today we're going to be discussing the state of commercial property. Next week, we're going to be discussing repurposing commercial property, where we look at some of the valid schemes coming forward that allow us to start to relet some of the empty units, even looking at more than reletting, what some of the actual changes, reconfiguration of town centre sites might look like in order to support our town centres going forward. And then part 3 of this is we're going to start to understand some of the broader structural reform, partnerships, governance, and how we look at the entities that support our town centres in terms of creating a new vision. So today, obviously, we start with the state of commercial property. Now, in order to help me with this, as always, I can only talk to you about so much. So this is why I brought in some experts who can really give us the lowdown on what's happening in terms of commercial property, starting with our good friend Steve Norris at Lambert Smith Hampton, who's going to talk to us about research he's done recently in collaboration with Revo. Moving on to Marie Hunt, who is Executive Director and Head of Research at CBRE Ireland, and finishing with James Charles. James Charles, my God, this is how much I talk about vloggers and influencers. James Child at Estates Gazette, who will finally give us some excellent insight. So Steve, can I bring you in for the initial presentation?
Sure, I'm going to share my screen. I say that with some dread now, OJ.
Good luck. It's like the beginning of a horror movie.
It is. Have I got controls? I guess that's the first thing. Yes, I have. So let's try. I think the issue last week or Friday was I had 2 screens, a bit like you, which seemed to confuse everything. So let me start from the start. If I can't see behind some of these things. Just bear with me. There we go.
Perfect.
Okay. Thanks, OJ. Hopefully, all of those on this in this meeting today. Well, I hope you did. I hope you could attend the webinar we did on Friday with jointly with Revo, which OJ was magnificent in again as a panelist. Thank you again to OJ. If you weren't there, then this will be new to you. If you were there, then sorry for repeating myself. So I'm going to go through that presentation from Friday, but it does resonate with the challenges that OJ was talking about. I just wanted very quickly, just a bit of background to me. So I'm National Head of Planning, Development and Regeneration at LSH, and I've been advising the public and private sector on town centres, planning, regeneration and development issues for almost 30 years now. I also lead LSH's dedicated town centre and economic regeneration team. And the advice we're providing is wide-ranging, from preparation of early visioning and feasibility, and that's including recently the preparation of town investment plans to support the town deals, which is a government-backed 4 billion funds that is going to be made available to 101 selected town centres, and I think 45 have already been announced. So and OJ, do give me a heads up if I'm running over. So the survey that we conducted jointly with Revo was done between October and December last year, so kind of pre the 3rd lockdown, but kind of with some opening up having occurred as well. And it was with LSH's main contacts and Revo's membership, but also with our partners, including the ATCM and OJ. And again, thanks for the input from everyone that got involved in that. We closed the survey in December, and we had over 400 responses, more than twice as many as we had in 2019, which was amazing. And taken together, these responses, they broadly help us to understand the key issues and challenges facing our towns and high streets and shopping centres, and how these changes have changed since the last survey, how these challenges have changed since the last survey we conducted back in 2019, and obviously the impact of the COVID pandemic, and the opportunities as well, and what are the opportunities, particularly in light of the introduction from OJ there. Some 3/4 of the respondents were from the private sector, and that was up from 68% in 2019, but we had a good representation from across those with a vested interest in the future of our towns and high streets, including town centre and bid managers as well. So what are the challenges? Well, it goes without saying that the 2020 was pretty horrendous. It's had devastating impact on households, businesses, and the economy. And it's accelerated many of the trends and market forces that have been driving change in the retail sector and on our high streets since before the 2008 recession. Specifically, as we all know, it's accelerated the growth and market share of online shopping and other internet-based activities. And I guess the immediate challenge that you're all facing is how to break the habits formed over the last 12 months and drag people away from their screens and back into our high streets, our shopping centres, our restaurants, our bars and our cinemas. And I guess in the summer months, the spring and summer months, one of the key things to do that, to build that confidence back, is through events and entertainment and making people feel that our town centres are safe.
Is it possible to get an appointment for Monday or Tuesday?
Is everyone on mute, OJ? Sounds like someone's having a...
Oh, hang on. Yep, someone's not on mute. Just bear with me.
I've actually been sent to different...
Okay, that should be sorted.
All right, here we go. Okay, no worries. But notwithstanding the impact of the pandemic, I think there's been some winners. For example, local centres and essential shops and services have performed relatively well. And this is something to build on, particularly if home working becomes the norm rather than the exception. More people choose to shop and carry out their essential activities close to where they live. And I think this will further reinforce the walkable neighbourhood concept and help fuel the growth of the corner shop and independent businesses, particularly as we've been talking about, the brands start to retreat from our town centres. And I do strongly believe the 2020s will mark the renaissance of the traditional butcher, baker and candlestick maker. We'll see the growth of the independents and the kind of smaller businesses again. A survey asked, apart from COVID, what were the top 5 challenges facing our high streets and towns over the next 5 years? And online shopping and high business rates, unsurprisingly, were the top 2 concerns. And also the fact that we've got too much retail space. And again, if you think retail is the answer to the problems your town centres are facing, then you're definitely asking the wrong questions or getting poor advice. The 5th biggest challenge, which wasn't identified by the 2019 survey, is the rise in home working and the decline in the need for traditional office space. And as I said on Friday, I personally think recent speculation about the death of the office is over-exaggerated. That said, there's no doubt that flexible working is here to stay, and many larger businesses are exploring the hub and spoke model. And this will ultimately benefit some of the more mid-ranking commuter towns outside of London and outside the large regional cities and towns. And again, flexible space is going to be very much part of that repurposing of shops and shopping centres. In terms of challenges, we also asked what the 2 main interventions would most help to address the climate crisis over the next decade. And as the slide shows, 2 out of 5 mentioned the transition to electronic autonomous vehicles. A third called for improvements to public transport, and a quarter identified the need for more pedestrianisation and the development of green and carbon zero buildings. But interestingly, about 1 in 5 also called for more green spaces and tree planting. And this greening, rewilding, the beautification of our towns and cities is important, not only in terms of tackling the climate crisis, but also from a health and well-being perspective. The impact of the pandemic has clearly shown that for many people and families living in apartments in and on the edge of town centres, the parks and open spaces have represented a critical extension to their living space. So where are the opportunities? How can we build back town centre resilience? Again, we asked the question of the survey, and as the slide shows, reforming business rates and introducing more flexible turnover-based rents and lease models were rated as 1st and 3rd respectively. So dealing actually with the costs, the occupancy costs, and we talked about, and we debated on Friday, the issue around debt and the burden of debt that many retailers are carrying and occupiers. Other popular responses included the redevelopment and repurposing of vacant shops and failing shopping centres, followed by the need for more homes in, on the edge of, and on top of our towns, high streets and shopping centres. And clearly providing more homes and more affordable homes in town centres will not only help to tackle the housing crisis in the most sustainable locations, but also help to underpin the vitality and viability of our centres by providing a captive catchment. And again, we're seeing many shops and shopping centres being redeveloped or repurposed for a chunk of residential. And we've also got the planning reforms that are coming through to create more flexibility. But within that, the latest consultation happened before Christmas on the PDR rights from Class C, i.e. shops, to residential. And again, I have some concerns about the unintended consequences and impacts of that on our high streets. So we also asked what are the critical uses, what would success look like for town centres in the next 5-10 years, and what would be the critical mix of our town centres? And we've managed to compare the results from 2019 and 2020. And although we've talked about our centres being overshopped, it's still clear that shops, cafes, restaurants and bars are critical to the lifeblood of our towns and high streets and shopping centres. They help to drive footfall, trips and spend. So we need to get that balance. We need to get that mix right. But our towns, and the message is really clear, our towns need to adapt and diversify. They need to provide more flexible space that can respond to market trends and demand. If they don't diversify, then there's a real danger that some of our centres could wither on the vine before the decade is out. Other active uses that could help to build greater resilience, and these talk about traditional anchors and shopping centres as traditional anchors. There's no reason why we can't see these as key drivers of footfall and linked spend. So health, education, arts, culture, heritage, all of those are going to be really important to town centres. One of the gripes I always have is when I go to meet local authorities, 5 times out of 10 when you arrive at the station, you have to get a taxi and travel 1 mile or 2 miles out of the centre to get to the local authority buildings. Let's get those public sector uses back into town centres, and they'll drive the footfall and they'll drive spend at lunchtimes and early evening. It's so important. Critical mix, well, this word wall just shows you in larger font, shows the importance, the weight given to these uses. And again, it just emphasises how important food and beverage and food and retail is, but as part of a much wider mix of uses. That's building resilience. That flexibility and diversity is so important, not just to our high streets and to our redeveloped, repurposed shopping centres, but also just to the very lifeblood of our towns. So again, OJ, just moving on, what we talked about, the third theme we looked at as part of the survey was around delivery and funding and leadership, because nothing's going to happen without that leadership, governance and money's being in place. We can have great strategies, but they'll never be delivered without those key foundations. And we asked as part of this, the survey respondents, who should take the lead in the transformation of our towns. And encouragingly, in my view, and for those who are kind of on this call as well, they thought it should be very much be based partnership based, a collaborative approach between all the key stakeholders working together with under one common aim and vision for the towns. We also asked who should fund the regeneration, and although public-private partnerships remain the preferred model, it's apparent that the public sector are going to be critical to delivering and funding town centre regeneration projects over the next 3 to 5 years. And this slide shows that some 69% of respondents from the public sector are planning regeneration projects compared with 1/3 from the private sector. And the pandemic also appears to have impacted more heavily on the private sector in terms of their confidence and ability to access critical capital funds. And we are seeing the disinvestment, and we as LSH are heavily involved in this as owners of shopping centres start to retreat to the market and look to sell, and local authorities are almost the first choice in terms of that, because there aren't many options out there. Again, this just reinforces the importance of JVs and partnerships in terms of delivery, but also, where are the sources of funding at the minute? Well, at the moment, and this is new to the 2020 survey compared to 2019, because it wasn't around in 2019, is the Future High Street Fund, the Towns Deal Fund, and the Levelling Up Fund you can add to that. So we're seeing much more of particularly on the back of the announcement of the budget, the centralisation of those funds to the government, who are then looking to local authorities to bid for monies to help kickstart regeneration projects. And although the total figures, and this is something Mark Robinson from Orlando and chair of the High Street Task Force said on Friday as well, I think, although it sounds like a lot of money, it's nowhere near enough to kickstart this regeneration over the next 5 to 10 years. So the headlines, and I'll finish just very quickly. So the research that we carried out identified a number of key themes and interventions that will help, we think, build back confidence and resilience as we emerge from this dark shadow of the pandemic. First, there are financial and policy interventions needed to create a level playing field between the physical and online retailing. That's still something that wasn't really addressed by the budget in terms of taxation on online retailing. And the support for owners, investors, occupiers and businesses. And we talked about the issue of the debt burden, but reforming business rates, reducing occupancy costs, reviewing traditional rental and lease models, and then support for independent businesses, not just financially, but also through the provision of flexible incubator space or market stalls, and through digital training to help them strengthen their competitive positions. Because after all, the M&Ss and the Tesco's were started out as barrow boys in the early 20th century. Relevant to what we've just been, the OJ introduced, the rethinking and repurposing the role and function of many of our struggling towns and high streets and shopping centres is absolutely fundamental. This needs careful planning, curating and managing, and that's where local authorities have a role, where they have ownership rather than the fragmented ownership and other issues that face a lot of our town centres. But there's no one-size-fits-all approach. It's clear that what we need are diverse, balanced and flexible centres and shops with a good mix of cafes, bars, restaurants, shops, residential employment space that can flex to changes in market demand and trends. And they need to be sustainable, smart and green. We need to plan now for that carbon zero future and provide towns with the physical and digital infrastructure to support green, clean and smart growth. And then finally, we need to lay the foundations for the successful and sustainable regeneration of our centres. And that what experience teaches us, teaches me, is that really does depend on strong leadership and governance and partnership working between all stakeholders and underpinned by robust strategic visions and investment plans for centres. So just to conclude, these might be, and these probably are, the most challenging times ever faced by our towns and high streets. Although I lived through the 80s and the early 1980s when there was talk of ghost towns and when the hearts of our towns were being ripped out by outer centre and by the big outer centre regional shopping centres. We've seen a renaissance of our towns during the 90s and early 2000s. I think we're heading for a renaissance again of our towns and high streets, but in a slightly different way that isn't retail led. It's kind of more flexible approach. But it's clear that everybody is saying our high streets and town centres are vital to the country's economic recovery and to growth and productivity. But more than this, they need to be restored as the heart and soul of our communities. The impact of the pandemic has shown us that our towns, high streets and local centres are valued for more than just their shops and services. And successful centres will be those that help to promote health and well-being, tackle deprivation and provide attractive places where people of all ages want to be, to meet and to enjoy. Thanks, OJ.
Brilliant. Thanks a lot, Steve. That's great. It's positive. However, I do know the challenges in there which you refer to. And probably the biggest challenge, which I spotted in that presentation, is the issue around money and where the funding is going to come from to do some of this stuff. So if I remember correctly from your stats, you say that it looks like there's been a swing in sentiment in terms of who will be funding some of the new town centre schemes coming forward, some of this redevelopment, with 2/3 saying that the money will have to come from the public sector now. Public sector will have to drive it. But at the same time, the confidence of the public sector itself being able to take some of this forward looks like it's dropped between 2019 and 2020. Is that right?
Yeah, I think it's a big conundrum that we're facing because we've just been through and we're going through, a lot of local authorities haven't got any money left. There's nothing left in the kitty, and any money that is there has to go to the essential services, and rightly so as well. In the past 5 years, they've relied on the Public Works Loan Board as a way of borrowing cheap money for regeneration and also to buy property for yield purposes. And they've got into a controversy around that because they've been buying property outside of the local authority areas. So that Public Works Loan Board has been tightened up. So you can still borrow money cheaply for regeneration, but not for yield purposes. And also local authorities are just becoming more and more risk averse. So they're having to, and rightly so. Again, they are looking more at regeneration projects and thinking, well, do we want to invest in this? Do we want to take on board the risk, given all of the other issues they're facing and the fact that they don't have a lot of money? Hence why the government, the Levelling Up Fund, the Town Centres Fund, the High Street Fund, are all important sources of income, but it's not enough by itself. And that's the issue that we're facing.
Yeah, that's massive. Everybody, if there's any comments, questions, keep them coming in on the chat box, and I'll ask them of Steve. But for now, Marie, can I ask you to give us an overview of what's happening in Ireland with regards to the commercial property market?
Okay, I'm just going to share my screen.
Fabulous.
Just 1 second.
Good luck.
Thank you. Can everybody see that?
Wow, first time.
Excellent, great. Well, I suppose I took my brief a little bit broader, so I'm going to look at commercial property in a wider sense, but obviously talk about retail as well. And I suppose there's a lot of the same challenges that I recognise in terms of what you're seeing on your high street and retail sector there. But the first chart I want to show you, because you might not be aware, is that the lockdown in Ireland has gone on for much longer than it has anywhere else.
Can I just ask you go to gallery view on the what's it called, slideshow view on your presentation? That might work even better actually.
Right.
Yeah, perfect. Excellent.
Perfect. Okay, well, this chart is probably about a week old or 10 days old at this stage, but you can see that the trend there, Ireland is right up at the top in terms of the longest lockdown, and it looks like, listening to our government today, that it's probably going to be the end of May before we begin to see it start to unwind. So it has been hugely challenging, and if you think of a busy Grafton Street in a typical day, and you take all the tourists away, and then you take all the business travellers, you then take away all the office workers, construction workers, students, you can imagine just how dire it is. And I think one of the key differences in Ireland as well is that construction is actually stopped as well. So we don't have any construction other than essential projects that are ongoing. So it has been particularly difficult. When we look at the commercial property market in Ireland, over time, it is a very cyclical market, and you can see here very dramatic peaks and troughs. But thankfully, the crisis that we've gone through in the last 12 to 18 months, it's probably more akin to what we went through in the early 90s than what we went through immediately after the global financial crash, when property, in every sense of the word, took a dramatic hit and values fell up to 50% in some cases. So thankfully, we haven't been as exposed as last time. But again, it's important not to generalize. So if I just jump up there for a second, if you look at 2020, values fell about 6% on average. But then when you look at the detail in terms of the sectoral differences, what you find is there are some sectors like industrial, logistics, where values actually increased. And when you look at sectors like offices, you know, the level of decline is nothing in comparison to what happened in retail. So in this particular cycle, retail has taken a big hit. And I suppose to echo what some people have said already today, it's not one particular part of retail, but it's something that was beginning to happen anyway, well before COVID. And it's probably exacerbated by the move towards online and all of these trends that have been building up over time, but very much accelerated over the last 12 months in particular. So just jumping very quickly to the office market in Dublin, it is a market that typically boxes above its weight in terms of the amount of activity. To put it into context, in any given year, if you add the 5 biggest regional markets in the UK together, your take-up is less than Dublin by itself. And that just shows you the extent of EMEA companies coming in, setting up operations here, obviously creating a lot of jobs and in turn feeding the retail sector. What we have seen is much greater demand for flexibility over the last 12 months, and any companies that need to move are putting those decisions on hold until such time as they figure out what the future of the office is going to look like. This chart is just tracking active requirements in the office market. So you can see at the very beginning of 2020, there was a huge amount of demand in the market, and that fell off very significantly as we went towards the end of the year. So a lot of companies have put plans on hold. Now, it doesn't mean it's all completely gone, because the pink dotted line across the middle is the average long-term demand. So we're in and around there at the moment, but certainly some of the big ticket requirements that were there have been put on ice. There's one big one that's out there at the moment, which is TikTok. They're looking for a very large Dublin headquarters, and they have narrowed their search down to a couple of buildings. So we're waiting to see, will that one be announced imminently? And then this is just looking at that take up over time. So you can see there we've had a phenomenal 2 to 3 years up to 2019. And then if we look at 2020, just 47% of the previous year's take up. And if you look at the pink line on here, the vacancy rate has started to trickle up. It's not because we're building loads of buildings that are sitting empty. development is very much controlled, but what it does mean is that some companies are offloading excess accommodation and saying, instead of needing 3 floors, we probably will get away with 2 or 2.5. So we'll put that excess space back into the market to relet, and that's fueling that vacancy rate rise. Just looking at the take up by type, I suppose the myth when you're outside of Ireland looking in is that every office leasing deal is a tech related employment. And I think tech is certainly a big driver, as you can see the darker green colour on here, but there are other sectors driving the market as well. And if you look at the red slice on top, that's public sector. If we look at the pink piece, that's financial services. So there definitely was an uptick in financial services last year, which we're attributing to Brexit, with companies coming in and setting up Irish offices from the UK. So that certainly was a driver. And I suppose before I move on to talk about retail specifically, I could have a whole presentation all about the future of the office. But this is one takeaway from a survey we've done recently, which I think is interesting. When we asked 10,000 office occupiers, are you going to stay working remotely or do you intend going back to the office? And 85% said in some shape or form remote working is here to stay. But interestingly, 60% said there's a role for the office too. So that leads us to believe that what we're looking at going forward is some sort of a hybrid model where people will be at home 1, maybe 2 days a week, but will be back in the office the rest of the time. So that has implications for retailers, particularly the F&B type retailers in the city centre that are set up on the basis of having a full workforce Monday to Friday, 9 to 5, eating lunches, going for drinks, food after work. If there's only going to be a smaller proportion of those people in the city or in the office buildings at any given time, that will have repercussions for them down the track. So looking at retail, again, an awful lot of the trends that you're talking about in the UK are very, very similar to what we've seen here. And to some degree, we've suffered in Ireland because of the carnage in the UK with companies that have gone into the CBA process, even though their Irish entity may be performing well. If they're closing down stores in the UK, invariably the Irish stores close or shrink or rationalise as well. So we have definitely seen, obviously you've mentioned Arcadia, Debenhams, Monsoon, there's been quite a few casualties off our high street. Very, very interesting, and I'll talk about it briefly at the end, is industrial and logistics, because quite a lot of these companies have a really loyal Irish base and were trading quite well in Ireland, but now have closed their physical store. So what they're doing instead is setting up logistics facilities and servicing all of that business online, and that's put increased demand then into the industrial and logistics sector. I'm not going to go through each of these in detail, but I suppose just making the point that this is exacerbating something that was happening anyway. And just like you've seen in the UK, we can't assume all retail is trading well or not trading well, because there's huge variation there. So you have pharmacies and grocery stores and neighbourhood retail, and in fact DIY retail in some of the retail parks that has continued to trade and is trading extremely well with people working remotely. Whereas the city centre, F&B, fashion, footwear, all of these things have taken a much bigger hit. And as you can see in Ireland's case, have had to be closed for quite a long time. We have the exact same issues in terms of very limited government support for the sector and a lot of negotiation between landlords and tenants. So we are seeing quite a bit of re-gearing. We're not necessarily seeing full rent abatement, but we are seeing rent reductions, and in some cases we're seeing re-gearing of the lease structures, maybe extending the lease by 2 or 3 years and compensating in that way. And it's really a case for negotiation, case by case. We have seen a reluctance to go to the turnover-based model, and that reluctance isn't necessarily purely on the side of the landlords. Some of the tenants themselves are reluctant to go down that route either. But certainly we're seeing increased demand for greater flexibility. And in terms of rent reductions, what we've seen is typically a 20% reduction when you go back to try to re-gear, some cases a little bit more, but obviously any new entrants to the market are getting better deals than that again. So there is value there for those occupiers that are in a position to move at the moment. And we're still seeing many sectors looking to expand, particularly the grocery sector. But again, that's more countrywide than it is specific to the city centre. In terms of industrial logistics, as I mentioned, this is the only sector in the Irish market where activity went up year on year in 2020. So there's kind of two reasons for this. One is Brexit, because quite a lot of occupiers and indeed many retailers were bringing their Ireland distribution in country over the last 12 months in anticipation of delays and also bureaucracy, tariffs, and all of the things that we've seen happening in the last couple of weeks. And on top of that, then COVID has added an extra layer of demand because of the increased online retailing that's going on. And also, I suppose, ironically as well, in terms of things like the storage of PPE, the storage of vaccines now as well, that's actually led to increased demand in this sector as well. So it's one of the only sectors to actually benefit from COVID, if there is such a thing. And also, it's a sector where there's very limited supply, because you don't go out and build industrial buildings speculatively, because 9 times out of 10, the occupier will have very bespoke requirements in terms of the fit out, the load capacity, the turning space in the yards, etc. So it's almost better to have the land and have planning and then lodge once you've got a tenant in situ and design and build in that way. So there's huge demand, not just from an occupier perspective, but equally from an investor viewpoint, because they see this as a sector that's going to continue to be strong, and it's a sector where you're going to see rental growth, which isn't necessarily there in other parts of the market. Investment is when investors then come in and buy these buildings, and obviously again you can see 2020 there was a significant decline in terms of activity, mainly because investors can't come into the island to even inspect buildings, so a lot of the campaigns are put on hold. And then if we look at that investment spend over time, the lighter blue color is which color is retail? I'm trying to see. Yeah, the lighter blue color is retail. So you can see from 2010 onwards, while once there was a point in time where investors were predominantly focused on office buildings and shopping centres and high street units, over time the appetite for retail investments has dwindled. So if you launch a shopping centre or a high street retail unit to the market, there will be bidders, but it will be a much thinner pool of bidders than what it would have been a decade ago or even 4 or 5 years ago. And the pink piece in Ireland is kind of a new phenomenon, which is PRS or multifamily. It didn't exist as a sector in 2012, and now it's the biggest part of the market. It was more than offices last year. So what you can see is PRS has come in, industrial being traded for investment purposes, hotels being traded, but retail shrinking all the time in terms of appetite. So just in the last few days, we've heard that there are 2 shopping centres about to be launched for sale, one being City West and on the outskirts of Dublin, and one the Bridgewater Centre in Arklow. And we're really interested in that because it'll be very interesting to see how many bidders emerge and, more importantly, what pricing they're going to be at. In terms of pricing in general, what we have seen over the last 12 months is that the Irish market is probably more aligned to the rest of Europe than it is the UK. So even in terms of rental declines or value declines that we've seen in the retail sector, they have been nowhere near as dramatic as what's been happening in the UK. And arguably that's because we rebased our rents after the global financial crisis, and we didn't build a huge amount of retail over the last decade. And a lot of our stock is anchored by grocery. So to some degree, we've been a little bit insulated. So we're probably more aligned to what's happening in mainland Europe than we are to the UK. Final few slides, just looking at the hotel sector. Again, no surprise, virtually no hotels changed hands in the last 12 months. It's been a horrible 12 months for them because they've had no business tourism, we didn't even have mandatory quarantining until quite recently, so they didn't even have that business to fall back on, and obviously no tourism other than during the summer when they were open for a little while last summer before we went back into 2nd and 3rd lockdown. Hopefully that's now beginning to change, and I suppose a little bit like retail, where vendors have realized that they have to reduce their pricing, they are able to attract interest. So a lot of the hotels that are now on the market, both on and off market, are at pricing that's probably 15 to 20% below what they would have been 12 or 18 months ago. And as a result of that, you have investor interest. So I think in the next couple of weeks, we will hear the first 2021 hotel sales starting to happen in the Irish market. So to summarize all of that, and I know I haven't gone through every single sector, But I think it's fair to say that COVID has changed the way we live, work, shop, and socialise. And some of these changes are going to be permanent. And again, there are some sectors like hotels that we've just talked about, and indeed retail as well, that have more pain to go through before they'll begin to stabilise again. Hopefully we'll begin to see the shops starting to open from May onwards. But I think it really will be a case of a couple of weeks or months after they're allowed to start trading again before the real impacts will be felt. Because I think a lot of retailers have been held up by the government supports that have been in place, the pandemic payments on wages, etc. And I think it's only when they reopen they'll be able to truly gauge whether they can afford to keep going. But there are many reasons to be positive still. We've learned a lot of lessons as a result of the last 12 months. And if anybody had told us exactly 12 months ago today that we were going to be effectively shut down for a whole year, I don't think we would have believed we would be in as good a position as we are. We've managed to adapt to the new circumstances and use technology, and it has been horrible, but it probably has been better than what we might have thought even 12 months ago. So I'm conscious I've gone through that quite quickly, but I only had 10 minutes and I wanted to give you as broad an overview of the market as possible.
Marie, another brilliant presentation. I've got so many questions. I do want to bring James in though, so I'm just gonna limit myself to a couple of quick comments. Firstly, and be honest with this one, I'm going to chuck this one at you. I'm going to chuck this grenade at you. It seems to me from your presentation, I think you mentioned something which I didn't really fully appreciate before, but the pain of the financial meltdown we had back in 2002, 2007, 2008. It seems Ireland took that on board and has made reforms in terms of how it works with the retail sector as a result, and that may have insulated the commercial property market from some of the impacts around retail turbulence now. And this seems to be well aligned with something I've noticed in the UK, whereby the banks themselves, the big banks, they are partly exposed to the retail property market, but not nearly as much as they were back in the financial crisis, because they had to change. They couldn't take on the same level of debt, of leverage as they did then. Do you think, in terms of our town centres in the UK, we have just been slow to learn the lessons in terms of how we work with retail? And do you think town centres in the UK have probably left them too exposed to something like this? Go on, be honest. Tell us as it is.
What I would say is we learned very valuable lessons after the global financial crisis, and it left us very badly burned. And I suppose to some degree it's left us almost afraid of certainly 12 months ago, we would have been hugely fearful if someone had said you're going to be shut down for effectively 12 months. I think we learned our lesson, and it was really difficult at the time. And I think what we did at the time is, if you look at long-term rental growth, UK versus Ireland, we took a very significant hit, and I mentioned a 50% decline peak to trough in terms of rents. So rents completely rebased at that point in time. You did have people going through the equivalent of the CBA process in Ireland over the last couple of years as well. So I almost feel we went through all that pain up front, and then it meant, yes, absolutely, retail suffered as a result of COVID, but not to the same degree. And when we superimpose what's happened with rents and look at it right across Europe, we're much more aligned with Madrid and Paris and Brussels and these other cities. We're nowhere near the level of decline in the UK. And I think it's also down to mix as well, in that a lot of the stores are grocery anchored. So that has saved them to some degree. And I think as well, maybe again, because the crash was so bad last time, we didn't build a lot over the last decade. We certainly wouldn't have been able to get bank funding to build speculatively. So as a result, development was very, very controlled and measured. And as a result, I think that helped save us a little bit this time around.
That's really useful. I think that's insight I hadn't really appreciated before. And just before we move on to James, I just want to make the general comment as well, because you picked this out in your presentation. And again, I think this is something that we don't always appreciate, but issues around the storage of PPE and the storage of vaccines, and actually the role they play in the economy. I believe that actually there's a big chunk of GDP in the UK that is actually now because of things like PPE, test and trace. Those issues that have cropped up in terms of mitigating the worst impacts of the pandemic, which now almost play a part of our economic activity. I didn't realise that it had had an impact on the commercial property market in Ireland to the extent it had.
I think the bigger impact, OJ, is retail in general, because if you think of an operator, and I'll use Marks and Spencer as an example, almost every single thing they sold in Ireland came on a ship or a plane, came through a port or an airport. They didn't have in-country distribution. They certainly, if they did, they were storing 24 hours worth of product at any given time. So when the lockdown happened first last time, we had huge issues with stock in stores. And we've seen the same issue arise in the last couple of weeks as a result of Brexit. So a lot of retailers are now setting up in-country distribution in Ireland. So they're not going to hold all of their inventory in country, but they'll certainly hold more than they used to previously, because they're beginning to realise that whether it's tariffs or costs or just bureaucracy and delays, particularly if it's food stuff, that it doesn't make sense to just rely on using the UK as a, you know, for shipping goods in and out. So Brexit and COVID combined is what's fueled activity in the industrial sector here.
Yeah, really useful. That's brilliant. Thank you very much. Oh, we'll definitely invite you back again. And can I now invite James? James, are you there?
I am. I'm still here, believe it or not.
Oh, fab! Excellent, excellent, excellent.
Not because of the content, I might add. Sorry, not because of the content, just because of tech issues. Right.
Yeah, for those that don't know, James is working off tethering, which is an issue I went through 3 weeks ago. So, James, good.
Let's give it a go. Let's see how we get on, shall we?
Yeah, let's give it a go.
Try and share my screen first, which is the obvious gremlin to circumnavigate. Hopefully you can see my screen now.
Oh, excellent.
Yeah. Okay. Right. Let's rock and roll. So, yeah, for those of you who don't know me, my name is James Child and I'm head of retail and industrial research at EG. I've been invited along today to share some analysis that we've produced in recent months and years, actually, looking at the structural side of retail real estate specifically. And hopefully, you know, this will add to some of the excellent presentations we've had already from Steve and Marie. OJ, if I do go on a bit, then do just give me a nod and I'll wrap it up if we're short of time. So there's plenty of reasons for concern when it comes to what's happening in retail. We're not going to dwell on this too much, but contrary to belief, the high street isn't dead, but there are obviously some areas of concern that have got to be addressed pretty quickly. Retail has to right size, and you know, depending on who you ask, there's anywhere between 20 to 40% too much stock out there. That's way too much for 2020 or 2021, excuse me. And you know, I think to properly incubate a successful retail offering going forward, we're going to have to think as much about repurposing as condensing space as well. So condensing that space that we've actually got. And, you know, retailers and their stores need to reposition themselves effectively if they haven't done already. You know, you need to create proper destinations, stores that people want to visit, and or excel in, you know, multi-channel environments as well. You know, some occupiers out there can, you know, do have the benefit of being able to just trade in store. Some do just online. But the ones that we've seen that, you know, haven't performed so well in recent years are those ones that can't get that middle ground right. So therein lies a task for occupiers. And I certainly think that, you know, stakeholders are going to be critical in this reanimation of places. You know, everybody on this call will know this a lot better than I do. But one retail unit is, you know, an inconvenience to a landlord, but having 10 empty retail units is a massive, massive regenerative issue for high streets and towns. So, you know, alluding to some of the things I think that Steve said, you know, repurposing this space is going to be, you know, critical and offers that practical solution to the obsolescence of retail that we are seeing and will continue to see. So I'm just going to go through and share a couple of slides about some of the data, which will hopefully highlight some of those areas where there are concerns. So something that's already been touched on, of course, is CVAs, store closures and administrations. And I, like many, have been following this since the probably end of 2017. I think that's when Toys R Us went bust. But the top line here is that 27 million square foot of space has emptied out since that period, with a caveat that this slide is a little out of date. It's only to the end of Q3 in 2020. And obviously we've already spoken in the presentation today about Debenhams. You know, that's a massive loss in terms of space, a 12.5 million square foot, which is the size of 5 Westfields in Stratford, or 160 football pitches, which seems to be the barometer of any measurement in retail these days. So I thought I'd chuck that one in there as well. But you know, that's not even including Arcadia, which I think off the top of my head is another 5 million. So if you imagine that a 2021 bar introduced onto this graph, it's already somewhere above last year as well. Obviously, department stores are at the sharp end of this consolidation. And OJ, you mentioned the news today about John Lewis and M&S shutting their flagship store earlier this week as well, or at least converting it to office space. So, you know, there's a lot going on in this sector for those occupiers, especially if you've got those big units. This leads us pretty nicely, I think, into vacancy rates. It's not a surprise to see that, you know, more and more shops are emptying out, but this is a nice stat from the local data company that shows us that we're around 8,000 occupiers lighter than we were in 2017. So around 8,000 retailers have decided to exit their premises. And unfortunately, there's no real sign of this actually slowing down. Increasing vacancy, it obviously means that more units are actually coming onto the market. So this slide indicates, what does it show? It's property link data, which shows how many retail units are on the market. You can see the chart there. It's up 40% year on year. And again, there's that caveat that didn't include Q4. So the top line from this slide is that retailers obviously need less space. And as a result of that, we are going to see more stock coming back to the market. But of course, the trouble is that it's getting tougher and tougher to let these units out. And that's because, and I think Marie kind of touched on this, is that we're now at that impasse when it comes to what retailers can and want to afford for property against what landlords actually need to service their own debts. This is especially true with shopping centre owners as well. You can imagine that if you're a landlord and you have a very strong roster of, sometimes it's 10, sometimes it's 100, sometimes it's 400 occupiers, then the turbulence can really ramp up. And rents are down 16% over the past decade, and lease lengths down 28%. And this really, proves the point that retailers are craving and demanding flexibility in their arrears. Turnover rents has been mentioned as well. That's becoming much more commonplace. Unfortunately, as an analyst, it's one of those things that's very, very difficult to get hold of because, invariably it changes day on day. If it's an agreement between landlord and tenant on, profits per day or week or month, invariably that changes, and it's hardly the most transparent form of rental payments. But it works for a lot of them, and hopefully people like us can get hold of that data quite soon and share that with you. All of this is having an effect on new occupiers taking space. This is take up across the retail sector nationally over the past 2 years. Obviously, you can see that orange line there, which indicates what's happened more recently with COVID. It was, really, really suppressed. If you were to carry that line on, it does actually come back up closer to the blue line, which is good news. But again, what we're seeing is a slow, gradual, sustained period of reduced take up in retail overall, which isn't surprising. And it's the rebalancing, I think, of these, of the market itself that's really wreaking havoc with their finances and how they operate. And I just want to share with you maybe 2 more slides to get you maybe thinking about where we might be headed in the future. Now, this slide is what the rental market looks like right now. So what you have here is number of new leases signed in blue. You can see quite a monstrous peak in terms of these sorts of charts around 2015, which is where we had that real aggressive expansion from food and beverage outfits, which has been met with a pretty sharp decline, and then obviously a cataclysmic one last year. What's more important probably are the grey and the orange ones, which indicate where lease breaks and lease expiries come with regards to those deals that have been signed. So for those of you who are savvy with data, you're probably looking at it and say, oh, well, when the blue line shifts across, then you'll obviously see those other lines shift across with it. It's just the state of the market. And that's true, but we do have quite a hefty raft of lease expiries coming in the future. And this is really critical because of where we are in the cycle of values and what's happening in the market. Almost 65% of leases signed since 2015 will experience break or expire in the next 4 years. And when you go even more granular with this data, what we find is that around 1/3 of those are actually over rented at the current, current rental levels for retail real estate. So herein lies a big conundrum for retailers and occupiers out there. A lot of them are consolidating already. A lot of them are saying, well, we had 100 stores, we don't need 100 anymore, we need 50 to meet our demand of what we're seeing with the move from shop to shed, which Marie touched on, I think, and that growth in the industrial sector that we've seen. And if they do choose to consolidate, then who's going to then take that empty space? So there's a lot going on, and I think finally there is one more slide. Steve, I know you touched on this in your presentation earlier about repurposing and what's happening. This is a nice slide that indicates what retail units have been turning into since 2014. You can see here, 1/3 of them have been transitioned into food and beverage. Although, as I kind of alluded to in the previous slide, we are reaching that real saturation point, I feel, with eateries, especially in the multiples market. But good news is that independents are still growing, and more recently we have seen that spike in interest of conversion away from A1 to C3. It's pretty controversial, and we'll probably talk on it a bit later on. And that I certainly think that there are concerns around this, with the plans to liberalise the planning system, if you like. And that there are some concerns for the real core of high streets and town centres going forward. That's all from me. I have unfortunately put a shameless plug in, which I hope you don't mind. But if you are interested in all of the data that you've seen, then do take a look at our report, which is called Retail Disrupted. And I think that's my last slide. That's all from me, OJ. So I'll stop sharing my screen.
Brilliant, James. Thanks a lot. That's really useful. And again, so many questions. I'm going to start with a nice, easy one for you. Do you think the very concept of the retail anchor store is now dead? Is it dead in the water? Or do you think actually there is still a future for that retail anchor?
I think
easy question.
There will always be room for an anchor, I think, but traditionally the anchor stores that we've grown to know and love have all been the same thing. Really, they've all been department stores or variants of department stores, especially in the UK. So what we're seeing is real upheaval in that sector. you know, the USPs of department stores have been outdated for the past 10 years, let alone, you know, what's happened more recently. So will there be room for anchor stores? Yes, there might be, but they'll probably take a different different guise than what we've seen before. There's been a lot of success around the reanimation of these places and repurposing of those units into other things, which seems to have worked. I know we're quite early on in the life cycle of that journey, but it does give me hope. And you know, not all retail is dead as well. That's the important thing to stress on this. There is a lot of negativity out there at the moment, and it almost feels a bit like we've come full circle in the 5 stages of grief with retail. For me, you know, myself as well as many others of you on the call have worked in this for years, and you cast your mind back a few years ago, it was all very much like, oh, well, you know, some retailers are just not pulling their weight and some are just failing because nobody wants to shop there anymore. But now we're certainly coming around to the idea that actually we are accepting that, you know, what we've got structurally isn't fit for purpose anymore. It needs to change. So there's a roundabout way to answer the question, I think.
Yeah, I mean, I 100% agree with the sort of realization that structurally what we have isn't right, rather than just saying the retailers just aren't pulling their weight. I mean, when you look at a retailer like John Lewis, and I respect the John Lewis, I think it's an excellent retailer, but even they are struggling in the current world. You know, there's a structural issue. I think just concentrating on something you've just said in terms of thinking about difference, because I agree on the issue of the anchor, and that because what we've had has been the same everywhere, that in itself has created challenges and a lack of resilience. Lisa Carlson, can I bring you in on your question about variations between towns and cities?
Yeah, so I think, you know, at the ATCM, we've firmly come to the conclusion that it is not the death of the high street. It is not the end of retail. Retail needs different space, but not no space. But listening to the data is so important. And I'm just wondering, because a lot of what you presented, of course, is aggregated. But we often think about and talk about different types of towns and cities, and there have been a lot of reasons for that, particularly over the last year, looking, for example, at the difference between coastal towns and the larger cities where there were so many offices and people working from home, versus the so like Canterbury were within striking distance of London and benefited massively from the 8,000 who weren't commuting. Those are just some examples of how we look at different types of towns and cities. So I'm wondering, when we ask these hard questions about the future of retail, maybe what data there is around different types of towns and cities.
Yeah, it's a really good question. I mean, obviously the slides that I've shared with you today are aggregated. It's just a national cut across everything. So we have, I don't want to say off the top of my head because I can't remember and I don't want to say the wrong thing, but maybe it's a conversation we can pick up after the session. But certainly, you know, different places have different challenges, but with that, I think brings definite opportunity as well, because a lot of people have experienced localism, haven't they? Over the past year or so, we've seen that there's been a bit of a boom period for independent retail during these lockdowns. People have been shopping more locally, and whether that's I mean, obviously it's a symptom of the lockdowns, isn't it? But whether that continues, I think it might. I think there might be OG, I think you said renaissance, a renaissance of retail of sorts. You know, loosely defined as retail, of course, but other aspects of town centre functionality as well. Cities are gonna be hit really hard with retail. I think whether it's a medium-term hit or a long-term hit, I don't quite know. And also the various different economies, which you kind of alluded to with, you know, market towns, university towns, seaside towns, they've all got their own challenges, and retail forms a basis of all of them, but in different ways. So it would be unfair of me to, I think, pin the tail on the donkey for an answer with this one, but it's certainly something we can chat about afterwards.
I know that would be great to follow up and just look at more, because I think there's a balance between the importance of how we all work together locally and all the different groups involved in how we work together, but also looking at the data. So that would be great. Thank you.
Yeah, that'd be great, James. And there's just a comment come in that's come in asking if you can share the link to your report. So if you can you put it in the chat box? Actually, I think that will be really useful for everybody on the call. And just while James is doing that, I want to just focus on some of the immediate challenges in terms of what we do with some of those anchor stores, given that some of them have been designed to a specific spec. So Kenny, can I bring you in on a comment you made earlier with regards to the challenge you've got in Liverpool 1 and what that means to that particular development? Because I believe that development was bespoke to the Debenhams.
Yeah, OJ, you're quite right. Yeah, so when Liverpool 1 was built, sort of 10 years ago, basically just over 10 years, it's all about anchor stores. We've got one at either end. So we've got John Lewis, which is, I have to say, thankfully, or it was one of the best performing John Lewis's anyway. So hopefully there's good news for that one at one end of Liverpool 1. But yeah, Debenhams at the other end, it was purposely built for them. So it's a bespoke building, and it's going to be very, very difficult, I would think, is to split that up into different use, given the levels and the way it was built as well. So like the one that you showed before with the Birmingham John Lewis, it's quite a quirky building, and I would really see difficulties on splitting that building up into other use. And obviously, we're not living in days now where we're going to get another anchor store coming in to take over, are we? So that never really is going to be a possibility that's going to come around the corner.
Yeah, that's really interesting. Helen Wimbledon, can I bring you in as well? Because if I remember correctly, you had a similar challenge in Wimbledon with regards to your Debenhams, if I remember correctly, in your shopping centre. Was that correct?
Yes. Hi, OJ. I mean, our Debenhams was built specifically for and I've read it in other people's chats as well. It was built specifically for Debenhams as a key store. And it closed down 3 years ago now, and I think it's certainly remained empty ever since, and will require a huge amount of redevelopment to subdivide it, because obviously it was purpose built. So subdividing is going to be a significant challenge and require a major investment to make that happen. Having said that, we potentially have a new occupier of our or new owner of our centre, so I'm hoping for some investment that will turn that around in the foreseeable future.
Okay, fab. That sounds positive. And can I go over to Dublin to Richard? Richard, do you want to just give us some quick insight to some of the changes you've seen with regards to anchor stores in Dublin city centre?
Yeah, well, look, our experience is I think Mary highlighted very well, the overall Irish experience, but in Dublin city centre, we've obviously lost the Debenhams, the Arcadia, Links of London, Cath Kitson, Accessorised Monsoon, and a lot of them are the chain variety of stores. They seem to be the ones that have been impacted most. We're not getting that many, smaller independent stores having thrown in the towel yet. They're obviously suffering a lot, but they seem to be holding out for reopening. So I think, look, we're probably going to see more evening and nighttime uses going in. I think we'll see more leisure and entertainment. I think we're going to see more residential. So obviously with more evening and nighttime economic activity and more residential, there's certainly potential for conflict between those two. So I think that's going to have to be well managed. And I think we're going to see more multi-use within buildings. Thankfully, we're not in a situation where Debenhams had the Debenhams store here. They've taken over, as you said, OJ, from Roach's store. So it wasn't a bespoke building, and actually we've very few bespoke buildings. So I suppose we're lucky in that regard. But I do see a number of those larger floor plate stores actually being adapted for varying uses. And there's a big discussion here as well about living over the shop, and I think that's going to involve compromise somewhere along the line between conservation standards and health and safety standards, and bringing property onto the market on the basis that it doesn't meet 21st century standards. They are what they are. And I can see, some of those more traditional retail units, of which we have quite a few still on the side streets. I can see independent access being reinstated, floor plate, the retail floor plate at ground level being reduced, and some of that accommodation being brought into more productive use. So overall, look, I think and it's been mentioned, a lot of the trends that we've seen were things that we had been seeing pre-COVID. I think COVID consolidated obviously the time period, but I think we were going to have a lot of these difficult conversations anyway. So we're just having them in a tighter timescale. But I still remain optimistic that we can come through this, and I think we're getting very good engagement with our council in terms of planning and bringing together the various private and public sector interests to have a look at what we can do next. So look, I refuse to be pessimistic. We will get there.
Yeah, good. I like the positivity. I like the positivity of our members. Absolutely, that sounds good to me. And Steve Norris, can I bring you back in? Can I ask you the slightly challenging question? If you think with some of the challenges we're seeing in the retail sector, is this impacting anchor stores more than it is the smaller retail businesses from your perspective? Or do you think this is about retail universally?
Yeah, it's a good question. I mean, we're hearing obviously the news is all about the big anchor stores and the big brands that are falling by the wayside. So that's what all the chatter is about. As I said in the presentation, I think there's been some winners from the pandemic, the essential services, the food. We've seen those, the butchers, the bakers. Hence why I said we could see the rise of the small independents, where kind of customer service and the customer in king comes back again, and the faceless brands actually start to go into the background. So I think that's why we will probably see a shift in that. But I don't think the independents, the smaller businesses are immune from this by any means, because we talked on Friday as well, OJ, about this level of debt that's building and how do we deal with that. I mean, I know just from personal experience speaking to the owner of the local cafe I go to in my local shopping centre, and the local butchers as well, they've still got to pay rents to landlords, and that's building up and building up. And I think hopefully it's not like James was showing, that ticking time bomb of leases coming up for renewal. We're not seeing a ticking time bomb where debt is going to have a massive impact on the smaller independents as well. Because I do see, in terms of anchors, I just think our way of thinking of what anchors are needs to change. Hence, again, in the presentation, that thinking about education, thinking about health, thinking about all those different uses that can bring people into our town centres. They are anchors as much as anything. The council being in the town centre is an anchor as much as anything. So it's just getting the balance right.
No, I 100% agree with that. In fact, I was gonna ask the question whether you think we should be seeing anchor as more than just retail, and I think that answers it perfectly.
Absolutely.
We discussed this on Friday, and I think somebody actually specifically asked the question: should we be thinking about more education institutions in town centres? To which it was the easiest answer I've ever given. Yes. Nothing more really to add. Course we should. And in that diversity comes resilience. So no, I agree with all of that. And Marie, just bringing you back in as well, do you think in terms of that resilience, residential has to be a key part? Is there an appetite from some of Ireland's commercial property owners to move from commercial to residential in urban centres? And what do you think about then the potential for conflicts, which I think it might have been Richard just mentioned, the potential for conflict between activities like evening and nighttime economy and residents?
I think the first thing I'd say is that from the planning code point of view, I don't think it's as easy to convert commercial to residential as it is in the UK. Now, you may argue it's not easy in the UK, but it's certainly much more difficult here. I think there's been a realization over the last 12 months, particularly if you're an F&B occupier that's been totally reliant on daytime activity, that when you strip the office workers and the tourists and everybody else out, that you realize just how exposed you are. So there is absolutely a need for a nighttime economy. And I think there's also a need for public realm and placemaking and bringing arts and culture back into the city centre. So I think this is probably something we've been aware of for a while, but COVID has certainly brought it right up to the forefront of thinking. So thankfully in Dublin, we're just at the very beginning of putting together our development plan from 2022 to 2028. So it's the perfect time to be feeding that sort of thought process into and explaining that you do need that residential mixed with commercial and have a truly mixed tenure, so that you have business there for daytime and nighttime. I don't necessarily think there'd be a huge clash between the two. If it's done correctly, it'll work well.
Brilliant. Thanks a lot for that. I think we're fast running out of time. So what I'm going to do is I'm going to draw a line under it there. But it's been an excellent discussion. Thank you to the speakers, Steve, Marie and James. You've been brilliant, great insight. Thanks for all those who've taken part as well. Just quickly from me before we finish up, next week we're going to do this again. So we're going to chat more about this challenge we have around commercial property. Next week, we are going to be focusing on that repurposing aspect. We're going to be joined by Stockton Council because, as some of you might be aware, they've got a really ambitious scheme on looking at the opening up of their riverside, creating an urban park in their town centre. But that also comes with the significant consolidation and also reconfiguration of their existing shopping centre space. So we're going to talk about that. We'll also have a leisure operator joining us who's actually really keen to take on some of those existing Debenhams stores without the need for much reconfiguration. So I think some of you might be quite interested in what they have to offer. So we'll be discussing that next week. Also coming up soon, we're going to be talking evening and nighttime economy with regards to reopening and some of the vulnerability issues we might be seeing on high streets as a result, because we've got a whole generation of young people out there who are yet to really experience their first legal nighttime out. So we've got a lot to prepare for in that aspect. And then also we're going to have the return of our cities group coming soon, so we can talk about the recovery of cities specifically, because there will be lots of issues around workspace, public transport, and other issues. So that will all go out to members soon. Thank you very much to everyone for being involved, and I hope to see you all soon. And if you want to join in next week, that will be great. Thanks all.